Good day. This is Peter Kniff from Castlestone Management with comments on the U.S. equity market for the week of 23 November. U.S. equity markets finished the week slightly lower on light volume, snapping what had been a series of record high closings. The trade talks between China and the U.S. bogged down on fundamental details, namely verification of compliance, and economic releases over the week showed slowing growth. The S&P 500 index fell 0.3% this week to 3,110.29. The Dow Jones Industrial Average lost 0.5% to 27,875.62, and the Nasdaq Composite slipped 0.2% to 8,519.88. With little to drive the markets, investors took a breather. Friday's positive purchasing manager survey helped reverse a downward trend in this week's Treasury yields. However, bond yields moved lower on the week, and the yield curve showed signs of flattening. The 10-year slipped 6.1 basis points to 1.771%. The 2-year gained 1.8 basis points to 1.628%, and the 30-year closed at 2.223%. It was a quiet week for the U.S. dollar, which seemed to be running into some resistance after its bounce in November from the sell-off in October. Gold hung on to gains Friday following weak economic data from Europe and against the backdrop of trade worries. For the week, the yellow metal finished with a 0.2% loss. U.S. oil futures came off a 2-month high on Thursday and settled unchanged for the week. WTI, the U.S. benchmark, closed flat, and Brent, the global benchmark, finished with a 0.1% weekly gain. Traders are expecting OPEC to extend production cuts. I hope you find these comments helpful, and thank you for doing business with Castlestone.